Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. My man.
Hello.
AMC.
AMC.
Winner chicken dinner over there. Yeah. That is a home run. That is, they'll probably call it a double, but I mean, I just staring at it. I love this. Just watching it is like, wow. 265 million shares have traded hands in AMC, and it's still going. It's 1 o'clock. It's incredible. To me, that's incredible watching it.
Respect.
A lot of respect. And you know what? It's like the toilet bowl syndrome. It's like the shorts, some shorts cover, and then the other shorts are looking at it going, are you kidding me? It's 19. I get a short. They get in there, and then the next dollar, they're like, you know what? I'm out. And then, and it's just
like Volkswagen, yeah.
Because everybody they're saying, well, when's the seller? And you think, well, the company can't sell any more shares, and you have 3 million people holding Lord knows how many shares each. They're not selling shares. So the only people that are trading is these shorts that are like circling around, and a lot of the gamma hedges and people who are short calls and they're flying up. I bet you there's a lot of people, people who own the stock who are selling premium calls, and they're probably just going, you know what, let me get in there and, cover my calls. And when you cover the calls that you sold, you're buying stock. So they cover the calls and then they're selling, maybe they're selling higher or they're not. But wow. Like, wow. I just look at that and go, wow. So it's kind of caught my attention. Sometimes I have ADD and I literally, like, I'm hyper focused. I'm literally staring at the screen, like, just for like an hour watching every tick on. This is incredible what's happening. Anyway, 265 million shares. That's good for that group. And I'm always wishing good things for people. So that's great. The news that we talked about Amazon yesterday, and then you saw this, right? The CVS Walgreens shares fall on report that Amazon may open brick and mortar. Of course they will, right? Like, why not? One day we're going to tackle the movie industry and then the streaming business, and then the next day we're just going to wipe out CVS and Walgreens from the face of the planet. When does this stop with with Bezos's company here? Like, how does this end? I mean, does the government come in and say, hey, you just can't slow down, you can't do this, like, can't kill everything all at one shot? But I just thought that was really interesting, and we saw some we see some CVS put buying here. Let's just take a quick look. Let's go here and do CVS here. Just right here in the front week, really, May 28th. We're seeing the 86, 85. Stock's coming up, back up a little bit. I think that's big news. It's pretty incredible. It makes sense, right? You got first, they buy Whole Foods, so they're fixing that. They have these. They basically are building grocery stores without registers. So they're going to do that. And apparently there's one in Connecticut that's a huge one that's really secret. And nobody knows who it is, but apparently a couple of newspaper artists said that it was Amazon up in Connecticut. And again, no cash registers. So they're going to do that with Whole Foods, save money, use probably some of that money and do more of the delivery service. And then on top of that, while you're at Whole Foods, if you want drugs, you have the pharmacy in the back, which just makes sense. I mean, Walmart does it, and people are there and they're shopping, and it's all in like one-stop shop. So, man, and CVS is not cheap. CVS is one of those places that they have high prices. They have high prices because you go there to buy nachos at 12 o'clock after everybody does. That's like smoking marijuana or something, and you're like, I need them to have the munchies.
Right.
You pay $10 for a bag of chips that probably costs $1. So I mean, people just pay the prices, and it's CVS and Walgreens. You pay for convenience, but man, it's still got to hurt, I think, a little bit to have a competitor like Amazon come to the game. So that's what I'm seeing there. One thing I wanted, we looked at. So after we, a lot of times we're doing this. We're obviously doing it live, and we're looking at the flow coming in live. But afterwards, I will look at stuff that I think is interesting to dig a little bit. And yesterday we spoke about Teams,
Yes.
the Team, sorry, TEAM, and they have the what's that software they use? The
Trello.
Which one?
Trello.
Yeah. So Trello, everybody uses Trello. It's really good if you're working with groups and calendars and putting things together. But regardless, the Team trade was a June 220 calls. They were getting out of those and rolling into December, the 130 calls, and 9,548 were sold, 9,000 were bought. So I actually, wanted to show you what I do afterwards and how I look at things. And so I just simply went to Holdings channel, and again, everybody should be doing this, right? You click on Team, who holds it, pops up here, and you start looking at some of the names. And this guy, Bally Gifford, is one who's interesting, right? He was long the Tesla for a while. Obviously, the BlackRock's a big name, but BlackRock being here is a clue of something, right? Usually BlackRock is where? It's usually up here. So BlackRock probably has room to buy if they were going to buy. But then I start looking down here and I see names like Lone Pine is smart guys here, hedge fund guys. Tiger Global, guy who's long Roblox. He's here. Roblox. They spend my kids. I actually buy Robux. But and then you see Melvin Capital here with stock and calls. You see Alkion here with stock and calls, and there's a couple other guys. You can find some of the names that we've seen before. But what I want you to see here is see these calls right here, right? How many do you see there? 9,548. That's exactly what was sold yesterday. So, every once in a while, this is live. Nice. You're seeing Alkion Capital Management trade. So I know Alkion. I've known Alkion for a long time. They're actually pretty smart guys. They're in the TMT space, media and technology. And they bought, for example, they do buy options. They are a little bit longer term players. They're looking for the big double, triple moves in some of these names. They had bought 16,000, 18,000 Roku calls when Roku was like $60. They bought the 80 calls 18,000 times or something like that. So these guys, they're smart guys. But if what I would say is just Google Alkion Capital, and you'll come up. And I found one article, and here it is. So if you didn't know who it was, if I didn't know, if I saw a name, I didn't know who it was, I would just Google, and I find an article. This is from 2006, so obviously a little bit outdated, but it tells me a little bit about who he is, where he comes from, to learn a little bit. This is probably has changed in 14, 15 years, but nonetheless, the structure of his hedge fund, how he's thinking about the world and how he's doing things. They do this interview. It's probably written out that they gave him the questions written out. Regardless, tells you what he's doing, fundamentally driven. I like looking, finding things like this to sort of show you that, I'm not, blowing smoke up your behind, that this is the way hedge funds do it. But they ask him the question, could you discuss your risk mitigation systems? They have an in-house risk manager who's looking at a lot of different things, diversification and all these, from individual securities to their sectors to liquidity to overall fund exposures. And then I think this is key. We also cover shorts with mechanical stop losses unless part of a long short pair of aggregate positions. So they have shorts and they have very technical stop losses. Again, just to show you that this is, it's everything that I'm trying to show you and explain to you how they're doing it, how they're thinking about it. Here's something. How do the strategic relationships Alkion has with brokerage and insurance houses translate into an edge for the company? I think it's a great few sentences. Our edge is mainly informational. We have an elaborate network. We always talk about their network of industry contacts, which we utilize on a daily basis. We constantly talk to private companies, VARs, design engineers, suppliers, customers, CIOs, consultants, and other contacts outside of Wall Street. One of our goals is to identify product trends before they become apparent to Wall Street.
Nice.
Again, exactly what I say. Can you beat that? When you're doing your analysis on a company, can you beat that? Because that's what they're doing. I tell you, that's what we were doing at Scoggin. That's what hedge funds do across the investment managers. More hedge funds where they're really focusing. It tend to be like the larger big mutual funds. They are, while they're talking to consultants, it's very long term, and a lot of times in long term fundamental analysis, the numbers speak for themselves. You can discuss the trends, but ultimately, Warren Buffett is looking at a big story. He's looking at Coca-Cola, and he's looking at the numbers, and the numbers right now are cheap relative to what he thinks is going to happen in the next 10 years. That's how, the long-term fundamentals, that's the play. A lot of times it's very focused on numbers. When you're a hedge fund and you're focused on the numbers, but you're also focusing on, immediate trends and catching the trends before the demand gets there. This is the work that you're doing, the network, the elaborate network and industry contacts, the talking outside of your research analysts at Goldman Sachs, talking to, this is a big one, private companies, right? The private companies who are customers probably of the bigger companies, and also giving you, ground on the ground feedback of smaller trends that are budding in different regions or different areas. This is where the edge is. And again, the reason why UOA is important is because I ask you, if you're doing the fundamental analysis, you're looking at the numbers, and you're playing options with that, can you beat guys like this that have a whole staff doing this every day? Right. That's why I think we've talked about the power of unusual options activity and sort of piggybacking on what the hedge funds are doing, because they are doing this work. And then the key part about it is that they're doing this work, and then they are making a conscious decision to use options. That's the big key. That is the big moment, because I'm at 3 steps. We're trying to teach you about that decision and why that decision was made versus stock, and how it's made, and how the options tool is showing you how it's thinking. But it's the logic and it's everything that goes behind it that the beginning of 3 steps is trying to show you and help you understand. So I think, when you're doing this, and again, this is my homework, right? I'm looking at team and I'm saying, who did this? Can I figure out who did this? If it was 9,000, yeah, maybe I could say it was Melvin or a couple other ones here. These are bigger names. JP, these are investment banks, so they probably have, these are like volatility traders. But Citibank this is Goldman Sachs City. This is a directional guy. Melvin is a directional guy. Tiger, these guys are all directional. So again, it's just to go show you what the analysis entails outside of what we're doing here. When we spot the UOA, that is the lead, that is the entry into the game. We're right. Narrowing down the field. Now it takes a little bit of digging. Who did the trade? Can we figure it out? Can we narrow it down to maybe 4 or 5 players? Sometimes you can hit it right in the bottom and say, oh, it's Alkion doing that, right? There are trades where you can see, oh, Melvin did this, or we go back, Steve Cohen did this. Oh, this is, Tiger, these are the things that I think is important. It's UOA, what we're doing here, top layer, and then you dig after the show's over. You got to dig a little bit and figure it out. Historical data is important, right? Because I can tell you that team was traded. The reason why I looked at it and I knew that the 13F was going to probably give me an answer was because that team traded on March 2nd and March 3rd. So I looked back, I looked at the open interest, and I said, historically, where did this open interest pop up? March 2nd and 3rd, it changed. It popped up. So I went back to that date and I started figuring out, okay, what happened here? And then I saw that the open interest stayed through March 31st, which was a clue that, now I can go look at the 13Fs, because I know whoever did that trade, he's got to be up on the 13Fs. And then I went and looked, and there was Alkion, and I know Alkion. And I said, gives me more confidence of who we're following, what they're thinking, why would they be doing this, what type of, they don't buy this to, again, they bought Roku at 60, the thing traded to 300. So they're not buying this for quick moves. They're looking at things that could actually explode. Okay, that's why they're buying options. So something like this is, I think, very important. It's important to understand that this is just the beginning. That just because you see UOA, you just don't just jump in, but you actually methodically go through a process of trying to figure more information as much as you can. We're always talking about events, and and we're asking, everyone watching this podcast, tell us what do you know? What are you seeing? Help with the story. Ultimately, that is where more value comes in. Okay, so I think that's very important.
Yes, great, nice.
All right, good. The next thing I wanted to lead off with is there's an article here. I think it's right on the homepage of Zero Hedge, and I think it's the fifth article. Nomura says U.S. stock markets are stuffed to death on options gamma. Okay, stuffed to death on options gamma. So what does that say? Well, in a nice long essay that they write and pictures, and they show delta and gamma and everything else, you can see. I've been showing it to you in pictures for a little bit of time here. It's right here. It's this line that we've been drawing right here, saying market's not moving. The market's doing this dance around this level. So when it goes up, it comes back down. When it's down here, it goes back up. What they're identifying here, and it's a good read. It could be a little scary at some points, but I think that one of the main areas here is right here. It says, well, according to Nomura's Charlie McElligott, the chokehold market is acting frozen because it is stuffed to death on options gamma, with a ton of vol selling seen so far this week, particularly in single names, whether via covered call overwriting and put underwriting, as well as due to perpetual SPX strangle selling, coupled with the ongoing slow bleed of VIX ETN longs, monetization into the latest inflation scare vol spike. Some more details, go into some numbers, which is where it starts getting a little scary, and these charts start looking perhaps like like your heart rate. So it starts getting a little bit more in depth, but I think this is what's important. Essentially, the market is seeing a lot of selling, and it's what we've been seeing, in the single names. We've been coming on for the last week and a half saying a lot of selling, a lot of people just reducing positions or just selling calls or selling put. It's just there's not a lot of buying. It's very if they're going to be buying, it's been very particular areas, which we're trying to show. But in the bigger pictures, that there's been a lot of selling and perpetual SPX strangle selling. Now, one thing else in this article that I thought you can try to walk through this a little bit. We won't do that. We'll spend some time here now, but here's one picture that I thought is interesting. This is basically absolute gamma level, spot gamma. This is the company for this date. It says, for plotting purposes, puts are giving negative gamma. Mm-hmm. Basically, just this is the SPY prices. So you want to hone in between 410 and 420. We're right in this area right here. That's where we've been up and down. Okay, even 405, but 410, 420, and you can see where the spikes are. This sort of spike here, which is right around 420, 21, and this is puts. It says here puts are negative gamma, so puts down here around the 415, 18, all over here. So this right here is what's causing this effect where things are being held. So I don't know how much they charge. I see them every once in a while because here, it's hard to get complete answers, but what it's basically saying, and it's what I've been trying to say is, in the event that 410 breaks, you have this gap down here where there is no gamma. There's a lot of gamma here, but if you get some exogenous effect, you can have this thing move one way or the other. It works the other way too, but here you see from between 420 and 430, there's like a wall. There's a wall of high gamma, okay, which means, again, customers are selling calls, dealers are buying it. Now, it's a tricky way to think about it, that it's just going to be a wall. The issue is, and the issue has always been with this gamma is there's two sides to the coin here. So, and I think it's important if you're going to go read that article. When they talk about people selling strangles, the dealers are buying, okay? When they're talking about people selling strangles, those people, they don't trade the intraday. They trade it one day, and then 3, 4, 5 weeks later, they come back and take it off, okay? If they're selling it to me and I'm sitting at Bank of America and I'm a volatility trader, I'm trading it every day. I'm the one that's going back and forth. When it goes up, I'm selling. When it goes down, I'm buying. Goes up, and I'm simply trying to capture the amount of premium I gave up, right? That's the game I'm playing. You sold the puts and the calls just to take in premiums because you're a big institutional fund. They're just saying, I just want to sell some premium. I buy it. I lay out a lot of money. So when the stocks go up, I'm selling stocks, and when it goes down, I'm buying, selling the index, and then I'm buying it back. Doing that, selling high, buying low, I'm making a little bit of money because I'm not doing it on the whole thing. I'm just doing it on what eventually is called the delta. And so I'm just doing it on a small percentage. Each day that I do that back and forth, I make a little bit of money. Hopefully by the end, I've made more money than I've actually laid out on day one. Meanwhile, you wake up and call me in 40 days and 45 days and say, okay, I want to buy them back, and then I'm going to get taken out of my position. But hopefully I've made some money, and then I get some premium back from what I laid out.
I see.
That's the game. Okay. So the point that I always say to people is be careful about when the trading happens, right? And how it happens. So meaning, when I'm trading it, that doesn't mean you're trading anything. Again, we said you're not trading anything. So as the stocks are moving higher and I'm long a lot of this gamma, I'm going to be shorting stock all the way through. That doesn't mean I'm short squeeze and I have to buy. I'm selling futures. It doesn't mean I have to buy those futures back. I'm leaning against my actual options. What happens is when the person decides that they want to sell the strangles, really the puts are zero, so there's nothing there, and he's just selling calls. That pushes the stocks right back down. Okay, so you get this effect of potentially stocks going up. It's muted because the dealers are shorting stock, and then there's a mismatch in timing where then they come in and say we want to sell it, and it pushes it down again. So there's always this. I'm sorry. I'm going to say it one more time. I'm shorting it. When he comes in, he has to buy those calls back, so he can actually push it, and that could give it its move up. So, it's now again, if it keeps going higher, I'm going to be shorting. But there's a game there. There's a game that it's called gamma wells because usually the move up then causes me to sell more, and the move down causes me to buy. So it starts getting stuck. That's what that picture is trying to show, essentially. Right. Gamma is always the toughest thing to explain because it's a concept, but I'm trying to give you some examples of when the buying and selling happens. And sometimes there's a difference in timing, which could cause a little bit more volatility than what you might expect. So right there, they're saying 410 is a level to watch, which we saw a couple of weeks ago. It goes through 410, immediately drops until everybody catches up and then gets back into this vortex where it's been for the last 8 weeks around 415. So that's where we are. That's what's happening. What causes in the end of the day, what causes these things to break is either the options expire, okay, and they disappear. So we talk about right now, it's like rubber bands. And I always talk to you about, okay, you see the open interest, it's going to expire, it's going to leave. That means the gamma is going to go away. That means the stock is free to go. In this case, the market might be free to go whichever way it wants. So that's why you look at the open interest. That's why you kind of look at it and say, there's a lot of open interest here. There's stop signs, there are rubber bands to some extent, and it may actually keep it, in place here. So again, how does it change? Something happens, a war breaks out, and it breaks the rubber band, and it starts going in a certain direction, or some negative news happens and breaks the rubber band, starts going down, and then you can have this really big downdraft. So it's a danger. It becomes dangerous because it lulls you to death, right? It lulls you to sleep. You're sitting there and the thing's not moving, and you're just like, it's never going to move. And then all of a sudden the bands start disappearing, and then you see a sharp move. Like, where did that come from? Like, that's how people get really surprised. Now, it usually doesn't happen overnight unless you get some shock. So what I always tell people is volatility tends to, it goes lower and lower and lower. It tends to move up slightly, start rising, and then eventually has a move. It usually doesn't go lower and then just immediately spikes. That would just be some crazy move. But something to watch. These are things, if you want me to talk more about it, I could. It's more conceptually just to think about. That's why I built this open interest chart, is to help people, instead of talk about gamma and stuff, is to really just look at the picture and say, this is where the lines are. Exactly. Right? So almost the same thing that we're doing at Options Geek. Okay. So anyway, those are three things today to start off that I wanted to make sure. We got the Amazon, which we've been talking about. We got the teams, which is more homework and how to connect the 13Fs with what we're doing. And then we got this SPX gamma. We've been talking about non-movement for the last 8 weeks. That makes it a little bit difficult, but there's your reason. It's sort of people are flooding the market with options that the dealers are hoping for a big move, and they're all chasing against themselves. When it goes up, they're selling, goes down, they're buying, because they need to make that money back.
Right.
Okay.
Right. Yes.
All right. Good.
Cool.
The other news I guess today we could talk about is Ford, right? This Ford
Yep.
is they love it, they hate it, they love it, they hate it. The one thing you know, let's see here. Ford, not Facebook, Ford. Good. All right. So stock trading well today here, breaking this level here, 13 and a half. So we want to see the bulls want to see it close above, let's call it it's this level right here, 1362 high. The closing high is 1337. So it looks like it wants to close above the closing high. 1362 would be better. It would show it's already through there. So to hold that there, that would be a bullish sign. You were seeing a lot of, besides CVS puts, we're seeing a lot of front month in Ford here. You're just seeing it all over the place. 13 has 14s, the Junes. It's literally all over the place. But the Julys, it's harder to figure out all this because it could be a lot of taking profits and then people jumping back in. It's very difficult to determine exactly where the flow is going. But here, it's clear that the 14s and 15s were being bought in July. You could see most of the volume here. Just by taking a look, the volume here with the bigger chunks was on the offer with the volatility trading in the 43 and it has 44. So that's already high. So this was call buying, stock going up, and volatility going up. So that would all make sense there. So the 14s and 15s are being bought. They've been continuously bought during the day. I think you pay a little bit more and go get the earnings, which are in September. So you see here the 44s. I think it costs a little bit more, but you get the event. You got to get a few more months and the event because you probably miss. You can actually do August too. So cut it instead of July's, just go one more month. It costs a little bit more, but you're always looking for that event that's going to move it. In fact, you might even look at a spread here or something like that if you wanted to try to play it that way. But that's Ford. Call buying, stocks up. They're talking about, what did they say today? 30 billion by 2030. I guess the one thing I'll always, think about, and I want everybody to think about is if you ask Ford how many cars they sold last year, they're going to say X. And you tell them how many cars you're going to sell in 2025, and they're going to give you some growth rate on X. They're not going to sell 10 million new cars. It's not going to be it's not cumulative. It's the one thing about these things is they're basically, they sold 10 million cars, they're going to sell 10 million cars. It just happens to be that there's going to be a mixture now of EV cars versus, whatever. So I listened to the CEO speak and, I got a funny, when I hear Mary Barra's speech, it's from GM, it's a little bit different. This woman spoke and it felt like it was just EV, just keep throwing out the EV to make sure that everybody understands Ford is going to focus on EV. But at the end of the day, I mean, what did you say? How'd you describe it? You described it pretty good.
You have to keep Wall Street happy by saying EV. It's like being a programmer. A new language comes out, you got to learn it, or the time's gonna, step
exactly.
Yeah.
Exactly. Or it's the cost of doing business, right? You got to upgrade your software. You got to upgrade whatever. So basically, if you think about EV as being some sort of upgrade, then GM and Ford are basically upgrading the stuff. I like it because they're getting into the hot sector and it's attracting money. But in the back of my mind, I keep thinking it's not like are they selling more cars, or it's not like there's going to be double the amount of cars.
Unless they charge double.
Unless they charge double, yeah. And so maybe the big winners are who's making the cars, how and so I think that's where you think about the copper and what it takes to make these cars. So in my mind, it's always in the back of my mind. You play the game. They had a capital day today. They had news last week with the F-150. They will keep having these new cars pop out. Every time they have a new car, you can't just add $5 billion to the company. So, I get a little nervous about when I see that. But hey, it's the game being played right now, and I'm all for it. So the other name that I want us to keep an eye on, because Lord knows I spend a lot of money on this platform.
Very invested.
Yeah, I'm invested. Without the stock, I'm invested. Let's see, Roblox. So Roblox, I look at today as a little bit of a signal, right? So you see how it traded today? I saw this. I saw it in the morning and go, geez, it's up again like this. This is insane how much it's moving and how fast. And then it came all the way back down. It's down $5 off the high after being up 25 in a week. So breaks out through here. I mean, we talked about it right around here and saw some activity. This was really the signal. Chase came out. Chase Coleman came out right here. That Chase Coleman from Tiger Global has a huge bet on Roblox. We've been seeing call buyers all through here. And now we're seeing Roblox pop up again today. And they were in the Junes. So them heavy in the Junes here. When it looks like institutional players, first of all, when you see institutional players in this area, see the darkened, the shaded area,
Yep.
That's where I get a little nervous. I go, not saying that they're wrong, but I start thinking, why are they in that area? If they really thought it was going to go to 130, they would spend more money and get more options here. Do they want the leverage? It could be that they just want the leverage so they get more units. But when they're playing in this shaded area, it gives me pause. And so it tells me that they would actually be buying these calls for $1, $2 and selling their stock. Risk reward. Okay. So when I see activity in here, I'm thinking more, even when it's high up here, I'm thinking you got all of these options to buy that are probably better or less risky. And yet you went all the way out here to buy, the amount that you're buying. And the question is why, right? You bypassed what's in here to go over here. And it always causes me to think they're buying this for $1, $2 because they don't want to let go of Roblox in case it goes to 200 and the market gets nutty. And they don't want to do that because then they'll be chasing. But they also are long X million shares. And so let's just buy these for $2. The stock's up $25. We're going to take some profits here. And if it goes to 115, it's probably going to 130 because it shouldn't be going to 115, which just means that momentum has taken its hold and it goes. So let's spend the $2. Let's get out of millions and millions of dollars, of actual money on the table with the stock, and let's reshuffle. And if it comes back in, we'll get to buy it again at like 75, 70. There's still risk. It's not like it's just a moonshot. It's, there's still risk. That's how they think. And that's when I see that, it's rarely that you see these hedge funds going to like reach for the way out of the money ones for $2 when there's a lot of better options probably. To buy those, they got to be thinking 140, 150. Why think that when if it's going to go to 150, that's almost 60% in 6 weeks here. So I can just buy these calls and make a better, not as much money, but a safer risk reward play.
Right.
Okay. So again, keep that in mind. That's what we're seeing here. We've been seeing this. We saw the call buying 90, 95, 100. Now they're at the 115, 120. It's a lot. It's a big move for a stock that's already, I got to believe it's 67 and probably $80 billion now. What's Roblox? Let's take a look. Let's take a look what Roblox is. Roblox is 50 billion. Oh, that's cheap. Just kidding. 50 billion bucks. But I thought for some reason I thought Roblox was 70 billion, but 50 billion bucks. Okay. So there you go. But I think that, I think it's important to recognize that. This is what I'm saying. It's a big move. Let's see what it does by the end of today, and see how it lands. But a big move like that after 25 points, you could see it come back to maybe people start thinking maybe a 10% drop here if the market wants to give it back.
Yeah.
Okay. All right. Good.
Makes sense.
That's Roblox. What else is got?
Cool. Harley Davidson.
HOG. It was this again. They were in
Again,
this.
And they're shuffling around the same thing. It's
We saw them come. So this is like odd. We saw them go from June 18 calls to June 18 calls to
11s.
June 11 calls. Was it yesterday?
2 episodes ago.
2 episodes ago? 2 days ago? 3 days ago? All right. So whenever it was a couple of days ago.
Yep.
And so they switched from June 18th to June 11th, and now they're switching from June 11th back to June 18th. That's odd. Okay, maybe they just got the dates wrong, or maybe we should check to see if there's a date or there's an investor meeting or something that people might have thought that this was important or whatever. But this is I don't know. It's odd to keep switching back and forth. Nonetheless, it looks like they sold out of this, the 48s in June 11th. Where are we here? June 11th. Here we go. And should we see spreads here? 120, 35 and a half. So you see this IV here, 35 and a half.
Yep.
Versus where it was. So yeah, it looks like we know they bought them. So it looks like they sold them and they came over here to buy the regular Junes. Regular Junes here, 48s, $1.60, 38.7. It was up a little bit, so $1.60, and let's go here to 49s. $1.20. Okay, so those are spreads. Yep. Yeah. So it looks like they've gone into 48s and 49s. Why did they split it? I have no idea. I don't have no idea why they went from the 18th to the 11th back to down the 18th. Sometimes they split. I'm trying to think. Maybe the dealer asked them, "Can you split the strikes a little bit?" I don't know. It's an interesting play here. So, HOG. But let's take a look at the chart. Basically, getting long calls in HOG is the idea. So, all right. So let's go back. I just want to go back a couple of. Let's go back 3 years. It's kind of interesting, and just in the chart, this is for whatever reason 43-ish, right around 43-ish. Right. So we say here, yeah, it's right around 43-ish. So call it 43.52 was rejected here. Okay, and then we got sort of this level around here, 32. 30 was the gap, and then over here it's, let's call it 23, 22. Okay. Yeah, I mean, this is the coronavirus opening. The pandemic here opens up here, and then so everything's open up, comes back this way. So I kind of sometimes look to see here. Sometimes that's easy to see momentum, where you drew the lines and it's moving higher. So someone's looking at these 40-50s for a move up this way. It's interesting. I'd have to look a little bit more to read more about it. Obviously, they sell Harley Davidsons, and people have a lot. People did not. Here's Harley Davidson probably averages $15,000 to $40,000, I would guess, for Harley Davidson. I think maybe some of the big ones are tags probably even to 60,000 fully loaded. But if you have the average spend for families going on vacation is probably around 10 grand a year, and there wasn't many vacations left last year. So there's some discretionary income saved up. I can see more demand for Harleys and getting out on that. I think is, I think it's interesting. I would want to read more and figure out why June 18th or why such near term, and what they think is going on. Go ahead.
Some of the news I read is Europe was supposed to put some tariff on Harley Davidson, and then they decided not to do it. And Europe is one of their biggest markets, so it's going to be cheaper now to sell there. Yeah. So
okay, that's fair. I can go with that.
A couple of days ago that came in. Yeah.
Maybe there's some sort of political event or something happening, or it just seems odd that someone is buying this without an event, a little bit out of the money here. It does look like it looks like 43 is a good level. It seems a little, and it does seem like the stock is obviously on an uptrend here, but it just seems a little bit odd that June 18th they'd come in and they'd want to buy 10,000 calls and roll them back and forth between the 11th and the 18th. And I'd like to know a little bit more, but maybe that's what we need to dig into, that European sort of decision and what that means for. Were the tariffs already on it, or was it a continuation of tariffs?
So here it is. Yes, they were on it. Okay. Yeah, can you see it?
3-year high on Monday after to avoid a massive import tariff imposed by the European Union. Gotcha. 2008. Okay, so it's in 2008.
18.
Gotcha. In 2018, sorry. Gotcha. Okay, so yeah, so maybe this is interesting and probably looking at the numbers, someone saying, okay, now you got to give credit to their business out there, and that's going to be this. But I guess June 18th is so tight, like as far as days go, what's going to happen from here there? Are they expecting an analyst upgrade? So if you start seeing a couple of analysts upgrade the stock, then maybe the way these guys actually work, to be honest, is we talked about networks. Here's a perfect example. Talk about networks. Where do you think the analysts at Goldman Sachs and all these places, they get their ideas? Part of what they do, they have a network too, is they're speaking to the hedge funds and the big institutions. And the hedge funds are constantly calling the analysts, trying to give them sort of enough information for them to make a decision, by pointing out, hey, did you know this? Or, what are your channel checks saying in Europe? Because my channel checks are saying this. And what are you seeing? And they might say, really? And then it might force the Goldman analyst to go, let me go check our channel checks. Let's go to Europe and go. And then they pick up something and they go, oh, wow, we're seeing a lot of different. And now they go and upgrade the stock. So hedge funds, they get it. And in order to spread the story, they have to sort of lead the analysts to the story or to the little nugget that they found. And they say, maybe you should look over there. It's like finding an egg in a house during, during the Easter egg hunt. It's like, yeah, maybe over there, or, you're getting warmer, colder, warmer. So anyway, that's interesting. So yeah, maybe there's something there. It's something to look at. How about, what's another one we can look at?
Another one, IQ, Netflix of China.
This one. Yeah. This one is another guy. Yeah. I mean, it's good for business. The guy is running around like a chicken without a head, without his head cut off here. It's IQ. Which one here? June 25th he's doing? What's going on here? Where is this guy? June 25th. June 25th. All right, maybe he's closing out these. These here, let's look at this week, 16. This is the ones. He's closing out the June, the May 28th 14s, and then getting into, let's see, the 14 and a halves, 17 and a half, 14 and 7 halves. I mean, this guy, we've seen this guy literally buy calls, roll them down. It's a little manic. So the guy's buying calls, probably bought stock. He's in stock now, but he bought calls here for this number here. It went up here. He's getting out of it, going to the next week here. He's now rolling it to the idea was, when we were seeing this, we thought, why not just go buy the Septembers, spend $1 and not mess around with this, up and down. So they were $1 last week. They went up to $1.75 after the earnings. If you think it's going to go up, and this is what this guy, obviously he's coming in there and he's literally lifting offers every day, or seemingly every day, every other day. And he's trying to catch the move, but it makes it difficult doing that with the options. It generates a lot of commissions for the banks, and you're chopping yourself up. When it goes down, you sell them, you roll them, you sell them, you roll them back up, in, out. With all that trading, he's probably flat or down, to be honest. And if he just bought the Septembers for $1, then he could just find another name that he can go trade around. But this person is trading week to week to week, trying to catch this big move, which either means he knows something, because the stock is down so much. When a stock moves down that much, what do you think is happening? If it's a real stock, Netflix of China, if it's actually real and it's not a fraud, or there's a reason why it has no lift. If it's a real stock, and what do you think the bankers are doing? They're looking for somebody to say, just buy this, or just look how much you can get this at a huge, huge discount. So that either that guy is crazy going back and forth and he's just flipping around, or he knows something. He knows that there's some talks. He knows that it's not a fraud, that the company doesn't know why it got caught up in this Bill Wang trade. And so it's either one or the other. Right now it seems frantic, but time will tell whether or not you get an announcement. Oh, Biden's going to take him back and or sell him to this person. Whatever's going to happen. But I think Biden owns like X% of that. So somebody's trading. When you're trading those weeklies like that, you're trying to get maximum leverage. They're trading like they know something. After you do it 20 times, it looks manic, but you can't take away the fact that I'm not going to discount that they don't know something. Okay. Yep. Is that fair?
Yes.
So the trading activity gives you a clue also of like what's actually happening here. Why is this guy up and down, moving this, getting literally always trying to get maximum leverage? It's instead of doing what I said, just by the September's, sometimes the hedge fund obviously will never tell me, no, that's not the right play. I need, this thing is going to, they're not going to say that. They're just going to tell you, no, that's not what I want to do. I want to do this. Those were clues too, right? Could I a rational person would just say, just buy them for $1 and then go to sleep and go do what billionaires do, go to the beach. I don't know. Spend some time with the dog. I have no idea, but you're going, up and down. You call me every other day. I want to sell them, buy them here. It's I can tell you though that many times it's because they're onto something, right? They don't just, billionaires don't act manic just because they're acting manic. Although sometimes they do, but they do it because sometimes they actually know something. And it is China name, which gives it more weight that they actually might know something. He doesn't get in trouble. He doesn't get in trouble. The guy who told him might get in trouble. He didn't care. He's going to try to make a lot of money. So anyway, that's my 2 cents. When I see that, I'm trying to bring in a lot of things into the discussion. Okay. Cool. Yeah, nice. IQ. What else? What we got?
We did a trade before in Apple. I think it was on the downside.
Right. So Apple, yeah, because I've been talking about how it's not trading well relative to the other ones. Like you look at Microsoft, and Microsoft has had a nice bump here, but I have noticed that Apple is not. It's not dancing like the other ones, And we're looking here. Let's go, Apple. Just feels a little bit heavy right around this level. Now when the stock was here, we did a put spread. We paid, I think it was about $1.35, but we did a put spread and sold a call. So we paid the 120, 130 put spread. We bought that and then we sold the 150 calls. Yes. Net, it was about $1.35, I believe. That $1.35 turned into $7. So that was good. Eventually it ended on May 21st at let's call it $4.60. Let's go $4.57. So now we're here, and the stock is not giving you this big jump. You see here, it's concerning because you got this 145 high, you got this here 135, and then it tried to go up a little bit. That missed. You have clearly a level here and here. 1, 2, 3. Let's go over here. So let's go 137, right? You have it clearly once, twice, broke through, eventually came down again, resistance, and a little bit right here, got close. So it just looks a little bit weak, right? The market is showing you 137, 145 as weak. So I would continue, that was a May expiration. I would just look again. If you're long Apple, it's fine. Apple's always been one of the best companies in the world for the last, Lord knows how, 15 years. But let's say, look at the June. When's earnings? Earnings are in more like end of July, early April. I wouldn't mind to see some sort of same type of trade. Let them beat you on the way up, because it hasn't so far. So something like the let's go in July so we can get some meat on the options that we're looking at. So if you're long the stock, if you are long the stock and you're looking for a hedge, I would say the 125, 115 put spread in July. That's going to cost you around, let's just call it around $2.50. And then you can sell the 135 at 137. So that's 2.5. So that's 1.7. Call it 113. So for $1.13, I can protect myself from 125 to 115. I got to give up everything above 135. But you see 135 has been very difficult here. Once, twice, 3, 4,
Nice.
there's a lot of action here. So I want to protect myself to about this point, 125 to 115, okay, which is sort of this level and this level right around here. So 125 to 115, this is where I want to protect against, just in case you see this 135 to 122 and a half, there's 12 and a half, 12 and a half minus 127 and a half is 15. So you get this A, B, C, 1, 2, 3, whatever you want to call it, Elliott wave. And then, so I want to protect against this, and I'm going to give up this for the next 8 weeks above here, but I'm leaning against the fact that the market is telling you that they don't like it here anyway. Right? The market doesn't like it at around 135, 137. This is sort of the range it doesn't like. And so I'm gonna give it to you here. So I'm just gonna do this until earnings, and then you can make a decision on earnings. So I chose the July's because I want to be able to maybe do something in August for earnings without being already in the position in, what am I looking at? Apple. What's Apple? I want to be in the position where I'm looking at something in August by itself, free and clear. Let the July's play out. It only costs me $1. If it trades all the way up to 135, at that point, everything will be cleared up. Assuming that the call options don't need to be bought back, but everything is cleared up, and then I can actually do another hedge, just a put spread, and leave the upside, or I can sell a really high upside with the implied volatilities as they go higher. So just, it's more strategy to do that with the stock, with the options around the earnings. If I don't have, okay, so now what if you don't have the stock? How would you play it? I would look at,
play the downside or the upside.
Either way, I would look. I'm trying to look at the board here in July. They don't make it so easy. So, okay. So instead of, I don't think that there's a lot of upside. Let's just say this. Let's do this. 130, 136 to show you what I'm saying. So we're saying 135, 136 is kind of like a resistance level, decent sized resistance. Yep. And if I throw in 135, 136, you see that it's bringing me up here. So there's not a lot of calls that I can buy, outright calls that I can buy to play Apple. So that's how you look at it, right? You're looking at the board saying, okay, where's the resistance? Where, I'm not a buy. I don't think that Apple's going to just trade up 10% here without meeting some resistance, especially while it's trading low, which it's trading heavy here. So I'm concerned about just buying outright calls. It could stall, and I'm not going to make any money. If it goes to 135, these 130s literally make $2.15, right? So you go to 135, and you buy the 130s, you lay 285 to make 215. That doesn't sound good at all, right? Not the way we learn it. So, how do I make money trading Apple here? We need a much bigger move. I think the bigger move would be a surprise, would be a downside move. So, but then again, does Apple move down to 110, this range right here? That's the area I need to be looking at. I need to be looking at sort of, see this right here?
Yep.
Where I'm looking at it once, twice, 3 times, 4 times. I'm looking at 107 and a half. It's got to break the 115, head to 107. But this is the 200-day 123. So it could pick up speed. And we already have this that we talked about, 1, 2, and then again to the downside. Sorry. So I am looking at this setup here, and then the 120. So now I'm looking at 115, 107. So I can click in Apple. Sort of. Let's look at. Let's just look at 110 for right now. See what it says. 110, and that's bringing me here, which is a little bit closer to what I was thinking. Except I would have liked to see the 120s a little bit cheaper, frankly. But I'm looking for I'm looking for something that's going to give Apple some like sharper movement. It's not trading well for whatever reason. So if the market does turn, Apple should be one of the leaders on the way down if it's not trading well on the way up. And then I'm looking for technical analysis to be sort of the boosters, if you will, on the way down. So stock breaks through 123.61, technical analysis, people who will watch the technical analysis, they're going to be selling. The machines will probably be selling some below the 123.5 level. So that's like a booster on the downside. Can it then push through 120, 115? Well, then you got this kind of being another booster down to 115. Can it break that? Again, moving 10 points on Apple's is 8%. That's a decent move. So I wouldn't expect that without an event like an earnings. So I'm concerned that, the best way to play it, if you just want, if you're negative on Apple, you can either short the stock with a tight stop, or maybe just buy these, and I wouldn't even buy that much, the $2 kind.
Mm-hmm.
Okay, so I see more of a spread. It's like, the 120, 110 for $1.40 or $1.30 just to have, makes a little bit more sense. Let's call it $1.40.
Yeah.
Okay, so something to think about, in Apple, just because I've noticed it's one of the names that is not trading. It doesn't give you that warm and fuzzy feeling that it's going to start exploding here like other names we're seeing. Okay.
Right. Okay. Cool.
All right. Good.
Now, before we got to revisit the Tesla put spread, I just got one quick news. Jeff Bezos formally announced he's stepping down on July 5th.
Really?
As the CEO of Amazon. Yep. So he's
Market
probably been let me get some deals in before I go.
Exactly. let me change the world before I leave.
Yeah.
That's interesting. That's interesting. Market probably doesn't. They probably know he's on his way out anyway.
Yeah.
What are we looking at next? One name. Oh, the Tesla. Let's see. The Tesla. Let's just see where it's at. It is interesting. So when we first started, it was we first started looking at where the 1x2 was. It was 555, 560. And I think that day was $24. So we've been following it, as it goes up and down. And we wanted to follow it until June expiration, which is coming up in a few weeks. Let's call it 4 weeks. So we have here the June 640, because I want to make sure we were doing a 1x2. We were doing the 640, 550, 1x2. We paid approximately $7. So 640 at 4. Today is 4. Let's call it 41. 41 and 550 is $8. Okay, so 41 and $8. $8 times 2 is $16. Less coming off of 41, so that's $25. So today that put spread is $25, which, I mean, again, if you keep in score, on that date that we started looking at where it was 24 with the stock right around here, 555, 560. The stock is literally up 65 points, and it's at the same exact spot. Wow. So it shows you sort of how in that vortex, once you get it right from the beginning, one, you can take, we were talking about taking some off, a little bit off and letting the rest play. But I told you then that it wasn't going to change that much to the downside. The money had been made. Now, in order to actually start losing that money, it would either have to go way down or way up. So that's the interesting part about these trades. It's sort of, it's Tesla's in this vortex between, let's call it 450 and 650. And between that range, this spread, this 1x2 would start, sort of increasing. So that'll be our Tesla update for the day. Stock is trading strong, and I think let's look at this. Just a couple of things. Obviously the 550 we're looking at. You have this thing moving down here. You have sort of let's take a look at this, right? This, and potentially 1, 2, and then down, but that seems to be holding here and breaking for whatever reason. It's coming back up, so this might be negated. You got to give it a bullish nod here that it cleared its 200 day. It went down below it, cleared its 200 day. It's got its 662, which is, we had a big down day here, so you got this 650 range coming at you, and above that you're gonna have some overhead, maybe around the 700 range. So there you have it. I mean, it's in this, call it, flag that we've been talking about for quite some time,
right?
And that's how I would, sort of frame what's actually going on here. If it breaks here, we were looking for something somewhere down here. The idea with the spread that we did was we did it right here when it was right before earnings. And we did, again, the 640. If we were playing this sort of range down here where we are, now we're just sort of just trying to manage it and say, hey, you take some off and you still have a lot of room for it to go. Where it really works now perfectly is if it goes from 621 back down towards 550 over the next 2 weeks. I don't know how to get there, but if it does do that, that spread will go closer to $50, $55. You'll see that quickly. Yeah, maybe by next week only $37, $38, but then after that starts rising pretty quickly. Okay.
Nice.
All right, cool. Good. So that's Tesla. Awesome. The other name, since we start talking about these crazy names that I wanted to look at and revisit, is this DraftKings. Stock is, very active on the put side in the last, say, couple of days, late in the afternoons. The put, the July 40 puts. So we're going to look at that in a second. But this is a name. Obviously, it's gotten hurt here a little bit. But, talking about 74 to 54 is 20. 62 to 42 would be 20. So you see how that worked out. Ultimately did one of this. It did a little bit of the dance here, 1, 2, 3, and then another thing. But again, Elliott wave. So you have something here going on. And we talked about the 200-day, which is always like a magnet. You just saw Tesla, it comes back up. The MACD is kind of at its low here, but someone was buying this put right here. Okay, so I just want to point you to it. It's basically a dollar option here. No earnings. You don't get the earnings, but for whatever reason, they were active here over the last few days. See the 35,000?
Yeah.
I don't know why. The company had, did what it was supposed to do. It's increase in revenues. There's a big spend still on what it's trying to do. But, when I see something like this, they're going out a few months. They respect the fact that the stock could trade near here. It's 50-day. You got this level right around here, 54. Call it 54 to anywhere between right here. You got the 50-day and sort of you got, this is a weaker level, I think, but somewhere right around this area. Let's call it 50 to 52. And you got the 50-day moving down. So there's a little bit of a wall here. You could see the last couple of days it tried 50 and it came off twice. And you've been seeing the 40 put buyers. So can you see something going from here? It should make you start wondering whether or not it can do, this type of move, which is, again, a little scary. 62 to 40, 40, 22, which get you down to all the way down to 28. Can it do that? Is that the next move down if the momentum trade starts to fall? That I'd be start getting a little nervous. I'm always nervous about it. This might take 4 months, because, this 200-day, see how this 200-day is going up? The longer it stays down here, the more that 200-day starts going like this and eventually starts turning over. But it takes months, just doing this in October, November, just doing it like this takes months. This thing is 200 days divided by 30, 6-month, 6-month average. So it does take a while, but if we're going to watch the stock, if it starts banging up against this 200-day and the 50 days moving lower crosses, then you can get a situation where, and it's going to be right into, we got another 3 months now, 2.5 months before earnings again. You start getting to a situation 2 months down the road where the stock is still in the 40s and the 50 days already now moving through the 200. You could sort of see where the momentum might shift. Either the momentum trade's got to keep giving itself that energy it needs to go higher, or some of these names are going to start rolling over a little bit after they've busted through the 200-day here. So that's something to keep an eye out. 30,000 options in DraftKings is a lot. So, keep an eye out there. We at 42 here, we were talking about the call spreads that would be in bought calls and buyers, and we were talking about a retrace to 50, let's call it 50 to 52. We're there now. So you got to be thinking, this 40 to 50 is 25% move up. And like I said yesterday, in this day, in this side of the mountain, in this type of momentum deleveraging potentially that's what it is. Then you have these 30% moves. And when it goes up 30%, people's eyes light up like it's going back to the old highs. And that's where you got to just take a step and rethink and see where things are and how it's trading and whatnot. So keep that in mind. Okay.
Cool. All right. Awesome.
Good. What else we got? Anything else? Questions?
We have some questions. I marked them down so we can address them tomorrow.
Okay, good.
Thank you, Felix. Thanks, everybody.
Awesome.
Like the video, subscribe if you haven't, and we'll see you
tomorrow.
tomorrow.
Be good.
Right.
Bye.
Bye.